one should continue hold this stock.
Next query is coming in from Shiva from Hyderabad. He's holding around 11,500 shares of Sadhana Nitro at an average price of 15 rupees per share. His current loss is around 55%. Should he continue to hold this counter or exit? Tapan, any view on this counter, Sadhana Nitro?
So it is going through a tough time, and I think still it's not out of the blues. If you see, the demand recovery will slowly and gradually will go up. Raw material prices stability is going to be there over the time, but now the PAT impact will be there. Again, the capacity utilization is improving, but slowly. So I think things will be getting on board slowly and gradually. So if he is not in hurry, I think she can hold the stock for now. Currently, maybe 1 or 2 quarter he can check it and then take a decision.
Got the view, Tapan. We have the next query on Vardhaman Textile, and our viewer is asking a short-term query on this one. Holding roughly 1,000 shares at 514. What would you recommend? Osho, welcome to the show.
Very good morning, Puneet. For Vardhaman Textile, the view is quite sidelined. The counter has not performed well in the recent period, and it is hovering below the long-term moving average. So I expect that there can be some kind of continued consolidation that can be seen in the counter, although there is no positive or even negative sentiments associated to the counter. On the higher end, I am expecting 460-65 to be seen as the immediate hurdle, and a breakout above 465 can provide some kind of momentum in the coming period. So from medium to long-term perspective, it will be advisable to hold the counter.
The next query is coming in from Mohit from Kerala. He is holding few shares of Kamath Hotels bought at a price of 290 rupees and Glottis India bought at a price of 77 rupees. Both the stocks are currently trading below his buying price. He wants to know whether should he continue to hold this counter for the next 3 months or should he exit and book losses. Osho, any views on Kamath Hotels and Glottis India?
Kamath Hotels is looking quite okay to me on the technical front. It is at a very strong support level. So from here onwards, there is possibility of some revival can be seen in a short-term perspective, but it is having a very strong resistance level around the zone of 270 to 280 kind of a zone. So that will be a critical level to watch for. If it gives a breakout, then from there onwards, we can see some kind of positive momentum in the coming period.
That's Osho's view on Kamath Hotels. We have another caller now dialing in from Mumbai. Nikhil has a stock query for us. Nikhil, welcome to Ask Profit. What's your query?
Good morning. Bari Renewable Technologies Limited taken at 1099.80 shares.
Okay.
Right now it's sitting at 993. I believe that it is having a court case. Do you think it will recover and go back to its old figures?
And got it, Nikhil. Osho, let me come to you on this one. Nikhil has bought Vari Renewables at 1,099. What would you recommend on the charts? Can come back to this price?
Technically, the counter is into kind of a correction phase. It has seen a kind of deep dive from the zone of 1,300, and there has been one-sided move in the counter. So I expect that in the short-term perspective, the pain is still evident in the counter. On the lower end, I'm expecting 960 to 950 to see some kind of cushioning or provide some kind of cushioning to the counter. But on the positive front, I am not witnessing any kind of reversal at current levels. So once it tests the zone of 950, then we need to review the counter that whether from those levels it can see some kind of reversal or not. But at current levels, 30 point of downside can be seen in the counter.
The next query is from Surendra from Chennai. He is holding 70 shares of Olectra Green Tech bought at a price of 1,270. He wants to know whether should he continue to hold this counter or should he add more or should he sell. Tapan, any view on Olectra Green Tech?
Olectra Green Tech, if you see that electric vehicle profitability expect to grow gradually over the next 2 years. Even the battery localization is going to improve the margins. And see, the EV adaptation is there, so that's why this company will be benefited over the time. If you see the tier 2 also demand is going up, and for company realization is improving to the premium mix. So yes, I know of course the stock is going down, but I think the valuation has also come down a lot. So I think one can hold this stock for the next 1 or 2 quarters. I think things will be getting settling down for this stock over the time.
Got the view, Tapan, but we have another caller now dialing in from Chennai, and Swaminathan has a stock query for us. Swaminathan, very good morning and welcome to Ask Profit. What's your query?
Yeah, that is, I wanted to purchase Keynes technology. Because Kotak has passed some strictures on Keynes technology, as well as the lock-in period is also over. So the people are telling it. Whether it is the right time to buy or shall we wait and buy, whether for short term as well as for the long term.
Got it, Swaminathan. Tapan, would you recommend buying to Keynes Tech right now? Because a lot of news flow coming in from yesterday as well as on today. Stocks almost down 10% in the last 2 days. What would you recommend?
I think one can let it settle down, but the company is good over the time. If you see the results are also coming good. Even if I see the EMS demand is expected to strong next 2 years, the operating cycle is expected to be normalized. But the problem was with Keynes was the valuation was on a higher side. Now slowly and gradually it is coming down. If he's not in a hurry, I think he can wait for 10-15% down from here also, and then he can start accumulating slowly and gradually. Overall, long term, I'm bullish on Keynes Technology.
The next query is coming in from Sunil from Bangalore. He's holding 350 stocks of Moschip Technologies purchased at a price of 255. Should he continue to hold or sell? Osho, any view here, Moschip Tech?
Again, the counter has seen a decent correction from recent period of nearly 218.85 kind of a zone and is hovering at a comfortable level. So one can stay invested in the counters and even can add further positions once it gives a breakout above 220 kind of a levels. So overall, one can look for accumulation purpose and even can hold it from medium to long term perspective.
Got the view. We have another, and right now what you're seeing on screen is also live visuals from Delhi. Now this is coming in, of course, because Russian President Putin is in India, and we got you the extended coverage yesterday. Live visual coming in of him entering the Rashtrapati Bhavan. So we'll get you and continue to get you a lot more updates as and when they happen. And that's a key one that you have to monitor in terms of defense agreements, amongst others, that could come in as well. But after arriving in New Delhi for his nearly 27-hour India visit, he will hold a meeting with the Prime Minister Narendra Modi and attend the India-Russia Business Forum at the Hyderabad House in the national capital. He will also, and that's going to happen before addressing a press meeting. And there on Friday, later in the day, of course, later today, the 73-year-old leader will also attend a private event, meet President Draupadi Murmu at the Rashtrapati Bhavan, amongst others, and attend a dinner with the Indian leader there before flying back to Moscow. So we will continue to get you all these exclusive coverage right here on NDTV Profit. But let me go across to and take the next query as well on Cochin Shipyard. Lokesh Kumar has been holding this particular counter for roughly about 61 shares. He's currently sitting at a loss of about 25,000. He's not mentioned his buying price yet, but Tapan, any view on Cochin Shipyard? Can he hold it for the next 1 year?
See, the stock has come down because of the high valuation, but you know that shipbuilding demand is going to be strong in next 2-3 years, and margin is also going to improve slowly and gradually. The problem is the execution part. They are not able to execute in a way with the market is expecting. Even the revenue is falling compared to if you see the valuation. So I think because the strong defense is there and export pipeline is there, I think if he can hold the stock, I think he should hold, but it will take some time to recover. I think if he wants to switch also, I think GRSC or Mezagon will be a better option if he wants. But yes, Cochin Shipyard will take time to recover.
This query is from Anusha from Warangal. She's holding 2,800 shares of Tata Steel bought at a price of 180. She wants to know the short-term view on this counter. Osho, what's your short-term view for Tata Steel?
The counter is into a corrective phase, but looking at the recent development, the counter is at a very strong support levels also. So I expect that the zone of 160 will be providing cushion to the counter, and from these levels there might be some kind of recovery phase that the counter can enter into. So from short-term perspective, I expect 160.64 to seen as a support zone. On the higher end, it is having a resistance around 175. So a breakout above 175 can provide some positive trigger. So it will be advisable to hold with 160 stop loss, and 175 should be kept at a watch list. Once it breaks through 175, then 185 to 190 will be the next target.
Got the view, Osho. But it's time now to take the only rapid fire round in this edition of Ask Profit. Osho as well as Tapan, you know the drill. Keep your answers on buy, sell and hold so that we can take as many queries as possible. The first one is from Keetana. She's holding Biocon at 418. Should he continue to do that, Tapan, even after the amalgamation decision of Biocon Biologics?
Yeah, continue to hold.
Next query is from Venkat Ramani from Bangalore. He's holding 1,000 shares of SpiceJet, bought at a price of 44. Is it a good time to buy more, Tapan?
No, sell.
Indian Bank bought at 846. What should he do with this counter, Osho?
Indian Bank is a hold.
Next query is from Sai Kiran from Bangalore. He's holding 1,369 shares of Sagility India, bought at a price of 51.15. Should he add more? Osho, any view here?
Sagility is looking positive to me. In the coming period, we can see some kind of a strong momentum. It is advisable to hold.
Mascon Doc bought at 3,100,000 shares by Akhil. What should he do, Tapan?
Buy at current levels, also on deep.
Sunil from Bangalore has 500 shares of Geo Finance, purchased at a price of 220. Should he hold or book profits, Osho?
Hold.
Our viewer has Vivek from Kolkata has 1 lakh rupees to invest. What can he buy right now, Tapan, according to you?
I think defense will be a better option. Also NBFC and PSU banks.
Agashri holds few shares of Tata Consumers, bought at a price of 1,172. What's the near-term perspective here, Osho, on Tata Consumer?
1190 to 1200 is a very strong resistance level. Once it gives a breakout above 1200, then only some positive trigger can be seen. But on the lower end, 1120 is a very strong support levels also. So it will be advisable to hold the counter. A breakout is expected to be seen in the coming period.
Tata Motors, PV and CV, both shares held by a viewer. What should he do with either of them, Tapan?
CV is in a much more better position than the passenger vehicle. CV can buy, passenger vehicle wait for 2 quarters more.
Rajesh from Chennai holds 7 lakh shares of IDFC First Bank, bought at a price of 76. What's the target here, Osho, for IDFC First?
For IDFC first target that is expected to be seen is near about 88 to 90, and if it breaches, then again we can see some kind of 3-digit number.
GMR Airport bought at 105 by Pratap. Should he continue to hold, Osho?
Yes, it is a hold. It has given a breakout and retesting the neckline, so I'm expecting 98 to 100 as a support level.
Right.
Gul has few shares of Reliance Industries, bought at a price of 1,200 rupees. Should she continue to hold this counter? Tapan, any view?
Yes, hold, and you can buy it every deep.
Tilak Nagar Industries bought at 469. What should he do with it, Osho?
Tilak Nagar is a hold at current levels.
Shinoj from Abu Dhabi has 348 shares of Delivery, bought at a price of 416.51. He's currently sitting on a loss of 5,000 rupees. Should he buy more, sell or hold? Osho, any view?
It is at a very strong support levels. Try to accumulate more around the zone of 430.
Well, Osho as well as Tapan, thanks so much for joining in today. That's all the time we have on this edition of Ask Profit. But appreciate your answers on the 24 queries that we managed to solve in this short span. But also viewers, thanks so much for joining in today, getting us perspective and sending in your queries for a truncated session. KYC comes up next.
The rupee has weakened past 90 rupees per dollar.
What is the RBI has to say about the rupee under the current context?
While we are trading above 90, our momentum indicators aren't confirming the highs. So we do think that this is a maturing part of the weakness in the rupee, and we'd actually look for a reversal back below 90.
I just feel very privileged in the film industry, an industry that I'm extremely proud of.
I'm honored to receive this prestigious award.
I feel overwhelmed that the NDTV has chosen me for this very special award.
Thank you so very much. This means a lot to me.
It's a great honor and a great privilege.
Really blessed to get this, and I'm really happy.
This is one of the few moments I'm going to be humble, so please record this properly, guys.
आज का दिन
सबसे पहले जो फुट सोल्डर्स जो प्रिजाइडिंग ऑफिसर्स जो टीम है उनको सेलिब्रेट करने का है.
And the NDTV Indian of the Year Award 2025 goes to
NDTV Indian of the Year 2025 19 दिसंबर सिर्फ NDTV नेटवर्क पर.
...2025 has been a tremendous year for markets, money and milestones.
And we have tracked it all right here. As the year winds down, we bring you the big moments, the bold calls.
The stories that shaped your money and the trends that will shape the future.
Goodbye 2025. Get set for 2026. Only on NDTV Profit.
The most coveted invitation in the Indian corporate golf calendar, where top corporates go head-to-head with the finest professional golfers. An exclusive circuit across multiple cities, aspirational, unforgettable. NDTV Golf Pro-Am, India's #1 golf Pro-Am is here. The course of champions, the conversation of leaders. NDTV Golf Pro-Am. Stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Hello and welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where we get your queries in and we find out companies where the interest is there for the viewers. And today itself, the company in focus is CWD. It's a short form company, but the question remains is why we want to know about this company. Just the market cap is 830 odd crore rupees. What is this company actually all about? But first is why we are getting this company in our show. That's much more important. First is, what are the upcoming expansion plans coming ahead? Companies dealing in soundboard as well. And also the revenue and margin outlook going ahead. What would it be? Will it be a turner in H2? That's the question we'll be asking the management as well. The third question is, what is the addressable market for two new things which are there? First is the QR codes, then is the sound box. Is the market going to be really big when it comes to this segment? Fourth question, what's the market for them? Overall potential size coming in, what's the growth outlook coming in? This company also deals with smart meters. That's also something which we'll be asking. The CNIC execution, that's expected to accelerate. That's what the management has stated. So we will ask these important questions as well. And importantly, the direct OEM sourcing, will that also improve the margins going ahead? That means there are twin boosters for this margin segment where we can say largely that an up move can come in. So these are the questions we are asking about CWD, but this is largely untracked business and I would like to just give the details about this company, what it's actually all about. Largely when you have a look at the QR codes or the sound boxes, so they do a lot of work in both the information and the communication tech side. This includes hardware as well as certain software integrations as well. Now the manufacturing, looking at it, the integrated solutions, they come in both software and electronics, and the company is having its own manufacturing setup as well. The business segments also, which companies are actually working on, this includes consumer electronics, and this also includes your smart meters and solutions related to it. And also the product profile, that is very much interesting, and to be honest, these are the future products to look at. And let's look at it. This is the first one being the smart medical devices, how things are going for growth over there. Weather monitoring system, not a very big contribution to the revenue, but nevertheless these are the new places where the work is happening. And smart energy, that's a huge market. The way India is growing at the cusp of electrification, and smart energy is very much important. Employee safety tools, very smaller versions of it, but nevertheless very much important. But the majority of the revenue which actually comes in is from the QR codes and the sound boxes and the smart meters. These are the three pillars where we will be questioning the management
where is the growth lying, and is there a margin up move coming in the H2 as well. But let's give you the rating parameters where we judge a company in KYC. We have spoken about the company, what are the questions we want to ask, but rating parameters much more important. Income statement, balance sheet, cash flow, return ratios. These are the 4 important ratios which you need to track in the financials, but non-financials also. It's very much important, like shareholding, street cred, valuation, outlook. These are the 8 parameters where we will be judging the company and giving our ratings. But before we go into giving the judgment and discussing each and every parameter one by one, we will be talking to the management as well to actually understand what has happened and what didn't happen and what will be the outlook going ahead. But before that, we'll be taking a small break. Well, yes, of course, before that actually, let's just take in the income statement. That's one of the first parameters to judge the company, and largely let's looking at the numbers. The revenue has seen a 3-year CAGR of 30% growth coming in. EBITDA also 12% growth. That's a kind of a decent up move coming in, but there's a concern for me, and that's the margin front. They had spoken about the margins going up in H2 as well, but to be honest, looking at the numbers till FY25, the margins, there hasn't been an up move coming in. Net profit, not so much to share with. Right now, it is also very minuscule. But net, let's look at the margin trajectory, how things have panned out. And from FY22, it was 33%. But after that, it has not breached the 25% mark. Even the H1 numbers, that's where the concern still lies for me. So net, I will still give a neutral rating to the company. Of course, the company has been listed from 2021 itself, but the numbers need to show. And that's why I have given a neutral basis when it comes to the income statement. Up next is the balance sheet. Over here also we look at it, the important metrics which would be in focus. They include the equities, the borrowings and the cash bank levels, and largely equity base is unchanged, not so much happening here, but borrowings, that has actually come down, and the size of which the company has, that's down from 12 crore to almost 9 odd crore in FY25. So that's a good positive point coming in. But one thing which has taken my eye is the cash bank balance. The question is, will they deploy this cash in expansion, or will it be some kind of a return to the shareholders? Because there has been a very significant up move in the company. So technically, they should be actually focusing much more on their expansion part, because be it sound boxes, be it the manufacturing setup, they all need capex, and a couple of capex programs are still going on. So it's decently placed. Cash bank, that's roughly 27 odd crore rupees, which we are seeing in the screen for FY25. So net for the balance sheet segment also, I will be giving a thumbs up for it. So we have done already 2 parameters. One is the income statement where we gave a neutral rating, and for the balance sheet we have given a positive rating. The third one is the cash flow segment, and that's also very much important because the company is dealing with not only the software related products where it's generally cash flow accretive, but hardware related manufacturing is also there, and that is why the volatility comes in when we speak about the operating cash flows. That's why you see the operating cash flows, no clear trend is coming, but it's on the positive side, roughly 3 odd crore rupees for FY25, and net cash flow, that has actually improved significantly, and that's a very good indicator for a company when you judge, especially in cash flows. It's in a new industry area, so it takes time to actually understand what's the actual business model of the company. So currently the net cash flow is sitting handsomely at 22 odd crore rupees in FY25. So based on this, I would still give a neutral rating in this segment. After the 3 ratings we discussed, the 4th rating is the return ratios, and that's where a jump has come in. The overall, the ROE ratios, the return on equity ratios, generally it should be around 15 to 16 odd %, but the way the company is at the stage, it's quite early, to be honest, if you look at the product life cycle of the company as well, because India just hit its inflection point. So this is a starting story when it comes to the medical devices, the sound boxes and fintech and agri-tech related stuff. But ROEs has been single digit, lower side for both FY25, but see the spike. For H1 FY26, it's at a consolidated blended level of 8 odd %. That means the strength is coming. Now in future, of course, we will be asking the company whether this 10 to 15% is sustainable and by when this ROE numbers can hit. That will be something very much important. But on the current historical basis, I would be giving a thumbs up for the company. So now 4 ratings are done. Off to the 5th one,
That is the shareholding pattern. And not much change has happened in the promoter segment. We see it's flattish at 72 odd %. That's decent, but there's an area of concern for me. No significant participation has come from the institutions, be it the domestic institutions or even the FIs. There's a slight 1% up move coming in for the DIs, but to be honest, there's nothing much there for the institutions. So interestingly, for the public itself, if you can just show how the public movement has happened, there is a significant up move from 28% in March. There's almost a 10% holding coming in retail. There's a significant interest coming in. So of course there is divergence. The retail on the one hand is showing a lot of strength, while on the other there is no participation from the institutions, and at times that becomes very risky for a stock. That's a historical data which I am mentioning to you. So net I will give you a neutral rating when it comes to the shareholding pattern. Sixth one is the street cred. That is also very much important, is how the returns have actually panned out if you are a long-term investor in this company or even a short-term. 1 month, 15%, not bad. 6 months, 59% returns coming in, and that's an area of strength. Year to date, 138%. And looking at the 1-year return, which we had asked you about and guessing the company, that's out almost 181%. 5-year share price, almost 1,000 odd %. So there's a significant uptick. You know, it's this journey from a micro cap to a small cap, and it has sustained that growth. And of course, that is coming in the name of, you know, new industries and a very higher top line growth coming in. But we need to see whether these numbers actually percolate down in the PAT numbers or not. But on the basis of street cred, if you are a short-term investor, positional investor, or even a long-term investor, all the boxes have been ticked right. So it is a plus, a thumbs up when it comes to the street cred. Valuations, whenever the stock goes up, the valuations indirectly they go up very high. The company doesn't have a strict peer. So in my analysis, I have just taken the trailing 12-month P ratio, and that comes in at 88 times, and that is the concern. So if the rate of growth of the company in the future by chance comes down, then there would be a significant correction. We have seen that in EMS players also, how this thing plays out. But the company itself is a quasi-EMS player and very dedicated to certain segments. So there is of course a risk involved in these segments as well, and the valuations are sky high, 88 times. So I would be giving a thumbs down for that when it comes to the valuations part. So 7 rating parameters have been done. We are coming to the last but not the least, the outlook parameter. That's a very important parameter to actually track. The first one is the sound vertical. That's expected to have an 18 to 19 crore monthly revenue in H2. Also, there is a segment called the CNI segment. It's a high margin segment, and that's where the bullishness is coming in. They're expecting the H2 numbers to be on the stronger side as compared to the H1 numbers. And there is a decent order book as well. Company's market cap is roughly 800 odd crore rupees, but the order book stands at 200 odd crore rupees. That's executable in the next 12 to 18 months, and that's where the revenue visibility also comes in for the company. Apart from that, the most important kind of announcement is that H2 FY26 is expected to be materially stronger than H1. Already we are seeing a strong up move coming in. Maybe the stock is factoring in the key H2 growth numbers. Company also came out with its Q2 numbers, and that was also coming on the bullish side. So overall, net, I will be giving a thumbs up rating when it comes to the outlook going ahead, basis on the management's guidance plus the industry tailwinds which are there in this segment. Now, this is a new company. That's why we are trying to break it down slowly. But the rating parameters is something which we are looking at. Income statement, it has been largely neutral, but balance sheet, especially on a higher cash balance, that is where the momentum is coming for me in my analysis. Cash flow, it's decent, but still the company needs to prove it. The industry is a bit quite early also sunset. So that's why I've given an equal rating. Return ratios over here, that's been on the positive side, but some numbers, of course, they were changing. Shareholding, it largely we can say it's a neutral thing, but the retail participation has picked up, and that's the reason why we have got this company in KYC. 10% increase in retail participation in terms of the total shareholding in last 6 months. A street cred was superb returns coming in, valuations on the higher side just because of very high returns, and outlook overhead that largely looks decent and strong going ahead. But net from our side, on the higher side of scale, we have given 5.5 out of 8 to the company CYD. But let's slip into a very quick break. On the other side, we will be joined by the management. Do stay tuned.